Let's move on now with a look through the day's top business news stories with Kate Moody. Hi there, Kate.
Hi, Catherine.
We're going to start over in sunny Greece, where they are still trying to renegotiate so many things, aren't they? Their bailouts, loans. They've had a series of setbacks, though, but the Prime Minister has been saying that he's optimistic there could be a breakthrough.
Yeah, within the coming week, actually, is what he's saying. Certainly much more upbeat than other participants in those negotiations, which, of course, have been dragging on for months. Last week's talks in Latvia failed to produce results. The negotiations continued via teleconference on Monday, and the two sides will be meeting face-to-face in Brussels on Wednesday. Prime Minister Alexis Tsipras was upbeat while speaking to Greek television overnight. He said he expects an agreement by the end of next week at the latest. Take a listen.
I believe that we are close to a deal. I believe that if no one wants to undermine or torpedo the negotiations, we are close to an accepted package. Now that we've reached the final stretch, we have found that we need to reshuffle our teams because we need to have full control and be as efficient as possible. We are at a critical stage, the final stage.
Now, that reshuffle that he's referring to appears to be an effort to reduce the influence of the outspoken Finance Minister Yanis Varoufakis, who has been unable to broker a deal so far and who's ruffled quite a few feathers among his European counterparts. While publicly the Greek government still supports him and he is, for now, keeping the role of finance minister, they have asked the alternate foreign minister to head a new policy negotiating team, while the finance minister's chief economist will take the lead on talks in Brussels. Remember, Greece is trying to convince its international and European creditors that its proposed reforms are enough to unlock the 7.2 billion euros worth of bailout loans that it needs to help pay its debts.
All right, well, let's move on with some company news. We're talking about a rosy day for Apple. Apparently, we can't get enough of their iPhones and their laptops. Their sales are soaring.
Exactly, and it's not just us. There's one area in particular where these sales really are taking off, and that's in Asia. iPhone sales in Greater China surpassed those in the US and in Europe last quarter. Josh Vardy reports.
An Asian success for Apple, as the California technology company sells more of its iPhone models in China than in the US for the first time. Apple shifted over 61 million iPhones in total this quarter, the second best sales the company's ever achieved from its flagship machine. Sales of the iPhone are 40% higher than they were in the same quarter last year, but down from the December holiday season where over 74 million flew off the shelves. The figures for the iPhone in China alone are up 71% compared with last year, bringing the company's total revenue there to $16.8 billion. The iPhone 6, with its bigger screen, has proved the popular model worldwide and shifted Samsung off the top spot for global smartphone sales. Meanwhile, iPad tablet sales were overtaken by the Mac, Apple's consumer computer, but the company gave no information about its latest product, the Apple Watch.
Relatively speaking, the numbers of the iWatch are very small compared to the numbers of the iPhone. Okay, so when your revenues are $60 billion in a quarter, okay, even if you sell 2 million smartwatches at $300 or an average price of $500, okay, it's a drop in the bucket in the short term.
Despite this, Apple CEO Tim Cook said the figures show an exciting start for the wearable technology. Alongside the cheaper models, gold-plated versions of the Apple Watch are being sold for more than $10,000, the first time Apple has directly targeted the luxury fashion market.
Right, well, those Apple results came in after Wall Street had closed up on Monday, but investors perhaps likely to cheer on those strong earnings.
Yeah, they were already sort of anticipating good results there. Apple shares closing up nearly 2% before Monday's trading day ended, although the overall U.S. indices did close lower. We saw a mixed picture on the Asian markets on Tuesday, the major indices sticking pretty near the flat line. Nikkei was the only one firmly in the green, shrugging off disappointing retail figures in Japan, which plunged nearly 10% in March. The European markets have just opened. We're seeing a pretty slow start to the day there, right across the board in the early moments of trading. Here in France, we've heard that consumer confidence levels have hit their highest point in about 5 years. And we're getting a lot of earnings reports that have been moving the markets. So we're going to take a look at a few of those in detail now, starting out with Orange. The French telecoms giant saw its quarterly sales drop, dragging revenue down to just over 9.5 billion euros. That's a little over 1%. Orange has been struggling to keep up with low-cost competitors. Last month, its chief executive unveiled a 5-year plan to cut costs and make its networks faster, while selling shares in businesses in Africa and the Middle East by the end of June. Falling global oil prices left their mark on Total's quarterly profits, but the strongest production levels in a decade helped offset those losses. Total said net profit in the first quarter fell 22%, a much smaller drop than expected. BP also saw its profits slide. The British energy giant saw an after-tax profit of 2.4 billion euros compared to 3.5 this time last year. BP said it's trying to reorganize its business to compensate for a period of sustained lower oil prices.
All right, well, from oil to another one of the world's most important commodities, perhaps the most important to us here on the morning team, talking about coffee. And Kate, thousands of people, maybe tens of thousands in the US and Canada, were forced to go without. Why is this?
Well, it's really proof that technology is not always our friend, Catherine. A computer glitch disabled the registers at more than 6,000 Starbucks outlets across the US and Canada on Friday, forcing the cafes to temporarily close their doors. And the chain said it was the result of a routine tech upgrade that went a little bit wrong. Now, you'll be pleased to know the crisis has now been averted. Everything's okay. You can get your coffee again. But it has been shining a rather unwelcome spotlight on the extent to which stores of all kinds rely on these really high-tech computers. Registers don't just tally up your bill anymore. They do everything from processing credit cards to sending orders to the kitchen and running customer loyalty programs. And even the smallest problem can create chaos, really, across all those lines of people waiting to get their caffeine.
It would seem they need some pencils and paper as backup, I think. Back to the olden days.
It might help.
Thanks very much. Kate Moody there with the business news.